Well, it's a very important day as far as the cement universe is concerned. Now remember, one of India's largest cement companies, ACC, would be coming out with its numbers today. Now remember, as far as the entire cement space is concerned, last quarter was expected to be a bit of a washout. However, last quarter most of the companies managed to surpass the very muted expectations as far as the analysts as well as the street was concerned. However, going into this particular quarter, the story is quite different. Now, the street has actually started pricing in, number one, a very strong recovery as far as demand trends are concerned, on the back of the fact that, number one, post the lockdown that was imposed by the pandemic, there has been quite a sharp pent-up recovery that was seen. Also, typically in the cement universe, post monsoon season, you also see quite a bit of a pickup as far as offtake is concerned. And also, quite interestingly, in the ET Now dealer check with multiple dealers and multiple managements, what we've actually understood is that most of the managements have started believing that there appears to be a lot of green shoot demand recovery as well. So they believe that as far as the cement universe is concerned, there is quite a bit of optimism, and this is something that the market has started pricing in. Now, when you're talking about ACC Cement, remember the company follows a calendar year, so the third quarter for CY20 is what we are looking at, and the revenues are seen at close to 3,370 crore rupees, down on a 4.5% on a year-on-year basis. Profitability is seen down almost 7.5% at 280 crore. Now, the EBITDA is seen down 3% at close to 540 crore, and the margins are seen almost flattish on a year-on-year basis. Now, what Citi is saying is that as far as the sales volume as well as realization is concerned, they're expecting it to be quite muted on a year-on-year front. Realizations, again, remember, on a year-on-year front could be muted, but again, on a month-on-month or a quarter-on-quarter basis is what we would be more interested in. And it is expected to be quite sharply improving from the previous quarter. The other thing to keep an eye out for is, number one, the margins. And margins this particular quarter and also in the coming quarters, remember, there has been a significant amount of rise as far as petcoke as well as diesel prices are concerned. And this is something that analysts on the street believe could actually impact the cost of production. So expect margins, if you see a bit of a decline, you could mainly attribute it to this particular reason. However, given the fact that there have been price hikes and also a significant amount of volume traction, sequential volume performance is expected to be much more better. This is something that is expected to offset the weakness as far as the margins that you may witness. Key factors to keep an eye out for, the key things that you're expecting from the management: number one, volume trends. Number two, what is it that the company is saying as far as demand is concerned? And this is something that could have a significant impact on not only ACC but on other cement companies as well. What is the company saying in terms of input cost movements? And also, most importantly, what exactly are the benefits that are seen accruing from the MSA or the Master Supply Agreement with